Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones on this Thanksgiving Eve. Go ahead, hit that like, subscribe, and notification bell, and come join the family known as Stock Up. All right, listen, I got a video that I'm going to just play and comment on that just happened. They haven't uploaded it yet, but by the time you see it, it will be uploaded. I got it from CNBC. I just recorded it on my phone, but it's actually what I wanted to talk about today. Now, first, I'm going to start with stock, and then I'm going to go to crypto. Now, there's a young lady that is about, I'm saying young lady like I'm old. All right, so this woman is going to talk about what Tom Lee talked about. And she's talking about how much money is still in the system on the sidelines from money managers that underperformed us YouTubers. They underperformed. They missed the V-shaped recovery, yada, 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 and they underperformed. And I want you to just listen to what she has to say.
Tom's stat about the underperformance of active managers is where a lot of this sits, because we can see that positioning is still underweight this market. Deutsche Bank updated their consolidated positioning. We're in the 34th percentile. That's underweight. And discretionary managers are in the 18th percentile. So there is still a large cohort of capital that has sat on the sidelines of what has been a very monster rally. So we think the best case for an end-of-year rally is that more people get dragged into this market. And I think the best fundamental support for that is that earnings estimates continue to be revised higher. So as long as earnings estimates are going up, GDP estimates are going up, it gives that cash on the sidelines a reason to chase into the market.
So Tom Lee has talked about the underperformance of active managers, active fund managers, how they have underperformed, okay? They missed the V-shaped recovery. They kept waiting on the sidelines to get in. And it's like hopscotch, just waiting for the right time to get in. Y'all young guns, y'all don't know nothing about that. And they keep missing. Meanwhile, even though the market was expensive, it was AKA frothy. The PE ratios are insane. And every single day, everybody was warning of the greatest crash ever. You and I still kept getting in at the right times and making money. Though it may not have paid off right away, it has paid off. Now, you know what? Before I go any further, I want to play a little snippet from Tom Lee as it pertains to the stock market, and then we'll get to the crypto portion.
1,000 in the S&P by year end. Now that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess what might you think about in terms of impediments looking into 2026?
Yes, I mean, we're almost through this year. And I'd say looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. But it's a replay of this year. And maybe we've now had 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period.
So now you put what Tom Lee just said and what she said that, and I agree that she said earnings keep growing, right? GDP keep growing. Then we could have a good end to this year, even though we are about to have Thanksgiving turkey. There's still time. But now Tom Lee said, and I agree, like 5 times we had like 5 years worth of trading this year. And all of you guys could attest to that, right? But he also said because of policies, we could have a 20% drawdown, whether it be monetarily or Fed-induced or president-induced, tariffs or whatever. And he's warning that in 2026, we could have yet another 20% drawdown. Now, 20% is a full-on correction. I'm going to let you guys know now that I am cashing up. And what do I mean by cashing up? I'm still getting in and getting out. I'm still having buy orders and money moves, everybody with money moves. But for every dollar that I put into my broker, I'm only putting 25 cents at use. I'm telling you guys that right now. Why? Because I'm cashing up my portfolio. And I'm not buying heavy into any Mag 7 stock right now, right? I have the positions that I have. And at some point, you may see Larry do some shaving or take a haircut, right? Via selling some stock and just wait. All right. Now, I'm not talking about my long-term ETFs. I'm not talking about my growth stock that I've had for years. I am just cashing up. All right. But we are doing well so far. So if you look right now, and I'm about 15 minutes before the market closes, you could see that the NASDAQ is up 231 points. And, I know that your portfolio is looking quite nicely right now. Mine is. How about yours? Let me know, how is your portfolio looking? We had so here's what I want to show you guys right quickly. We'll go right back into crypto. I posted this morning in Money Moves, okay? And this is the Qs. And when we opened up, we were here. And I drew the lines. This is pre-market highs, pre-market lows. And here is where you could have done puts to. Here's where you could have done calls to, right? It hit right there at 615.50-ish, okay? So let me just correct that. If you were on the chain, you would have said, you would have said it would be right there, all right? 50, okay? Let's just call that 50, right? And you would have made money had you did a call option, especially if you would have come off the candle here and you could have rolled it up here and did that. I called that out this morning. I also called out Tesla this morning, okay? And you would have entered in. I had this right at opening bell. You could have did a put, and especially when we came under pre-market low, and you could have made money, right? And so I was busy studying because we're going to really get into it. I gave a third one that didn't react that much, okay? I also gave this one, which was Rigetti, right? We didn't do much here, but you made money. You could have made money on Tesla today, right? And you could have made money on the Qs today. I do the Qs because everyone else is doing the SPY. I choose to do the Qs, and you would have made some money. As a matter of fact, I made a little money, all right? But it was moving so quick, it was too quick. So, and mine was really for study purposes because I really want to light Money Moves on fire. Okay, we'll talk about that later. Listen, if you want to learn how to do that, come and join us. Stock Up You, coupon code LEARN. Black Friday sale is going on right now. Come and get some of this money. Okay, and if you want to join me in Money Moves, that'll be the second link below. But learn how to do this, learn what this means in Stock Up You in a language you can understand. Now, let's move to crypto. First, I want you to listen to what Mr. Tom Lee had to say.
Now, you mentioned obviously the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. And it led to what they call auto
you definitely
deleveraging.
made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay.
So now Tom Lee is saying crypto is lagging. He's saying now, instead of it being a precursor to the stock market, now it's lagging, as it has not been this year. It's actually been leading. Now it's lagging because he said 2 million accounts went to zero because of over leveraging. This over leveraging is costing us all. It's not good, good people. This over leveraging is not good, and it's costing us all. And he talked about the glitch. I played that video. Just look at all my crypto videos. We talked about the glitch that Tom Lee has been mentioning and how it is liquidating and is negative for crypto. Let's take a quick look at crypto, shall we? So we could see that we got a lot of green bubbles today. But if you go to the hourly, it's going to be red, right? Weekly, you're going to see mixed. Today is a decent day, but we're still down, good people. We're still greatly down. Now, we did go to 90 this morning. We were at 87, and then we ran up to 90K, all right? So we're looking at Bitcoin up about 3%. We'll take that over the last 24 hours. We can see that ETH got a little bump to 3% also, and XRP 0.75%. But over the week, XRP did do well because of the new ETF. And you guys already know where we are here. So now, let me just wrap this up by saying that, number one, you guys know that the market is closed tomorrow, right? It's Thanksgiving. Liquidity, momentum is going to be low. Volume is going to be low. Momentum is going to be low. It was low today, and it's going to be low Friday. Tomorrow, the markets are closed, and Friday will be a half a day, okay? So we have all of this going. So I'm just going to tell you guys in the short term and the long term. Long term, should I say short term, by the end of this year, I still believe that the stock market can recover, fully recover. We're not fully recovered yet, okay? We're just getting back a little that was taken from us, okay? I don't get too excited too quick, because if you really look at it, we're still down. We're still down by 1.75% on the NASDAQ, and let's just call that 1% on the S&P. So we want to gain this all back. But if you've been following me, we still been making money because we have been buying on the lows. Not every dip is a dip buying opportunities, but we've been buying the ETFs. And if you pull those up, you'll see that they're green if you've been buying the right ETFs. If you want to see what I'm making, that's money moves, okay? But if you want to learn about technical analysts, you want to learn about basic fundamentals, you want to learn about charting from Stocks with Josh is in there. I got Keenan Grace talking about beginners, options, and then I got a full options for dummies class. Use coupon code LEARN. That's going to be the top link in that stock up view. Listen, I want you to have a blessed and safe, wonderful Thanksgiving. Remember, no market tomorrow. We're just going to enjoy family. I may come on and wish you a happy Thanksgiving and be gone, right? But we're going to enjoy family tomorrow, good people. And that's what we're going to do. If you've been rolling with me, we're going to be thankful for the giving that we have, because our bags are much bigger together this year than they are empty, even with the red days. I'm thankful for you. I'm thankful for life, health, and strength. I'm thankful to the Creator every day that allows me to do this. When I say I love you guys, when I say live, love, laugh, and learn, I really mean the laugh and the learn, all right, and live your best life. But I also love you guys, okay? And that's why I do this. And it's because I want us all to come up together, all right? Let's look out for one another, okay? And remember, Friday is a half a day in the market, so it's going to be chill. I wouldn't be getting into any big plays or anything like that. You're going to have, weak momentum, low volume, and everybody's getting ready for the holidays, okay? You know what? I'm going to play my other outro today, okay, good people? Because today is a good day, okay? Let's find that. Where is my outro? Okay, here we go. All right, good people. I love you. Live, love, laugh, and learn.